Okay, guys. I thought I should explain how you can trade a range and do a quick recap of this trade that I took for 26 hour on Euro USD. All right. Um, Let me do a quick explanation of what a range is. Okay, a range is basically when price is caught between two price points. Okay, just forming a high, forming a low, no consistent higher high, higher low, higher high, higher low, lower high, lower low, and all of that. Okay, you know that when I my explanation on market structure, if you check my explanation on market structure, I explain the different types of market structure, an uptrend, a downtrend, and a range. Okay, this is an example of a range. Okay, ranges usually form when price makes an aggressive move to the upside or a downside. Okay, when price drops aggressively or goes up aggressively. Okay, when it is ready to drop, the first thing that it forms is a range like this. Okay, so how do you identify a range? Once the price goes up like that, okay, it is going to form a high. Then after that, it is going to form a low, okay, or it forms a low, then forms a high, whichever one, okay. So price is going to form a low and then forms a high afterwards and starts trading in between. Okay, see this sideways price action in between. Okay, now when price is ready to go down, usually you see a sweep of the low. Okay, you see a sweep of the low and you see a sweep of the high. Now, how do you draw your high, I mean your range high and your range low? Okay, so pretty much what you can do is to just use the fib 0, 0.5 and 1 and draw your fib from the high to the low of the range. Okay, this is the low of the range. All right, this is my fib. This is my fib. Once you draw it from the high to the low of the range, remember yesterday I was telling you that this is a low that needs to be broken for me to switch bullish, if you can recall. And I mentioned it also yesterday video that I was waiting for a sweep of this high. Okay, then I will look for MSS or MSB. Okay, if you say MSS fine, you say MSB fine, whichever one, it doesn't really matter. What you need for range deviation is market structure break, and I'll explain shortly. Okay, so this low was swept, the liquidity was taken, then I started waiting for a sweep of the range, okay, the range high. All right, so that happened. We had a sweep of the range high. The next thing you want to wait for is for price to deviate back into the range. Okay, deviation back into the range. And let me go to the 1 minute time frame so that I will show you. Okay, so price deviated out of the range. So the whole of this is a deviation. What deviation simply means is when price is trading within a range and then breaks out of that range, okay, and breaks back into the range. The price action outside of that range is what you call a deviation. So all of this, all of this, this is deviation. Okay, everything here, this is deviation. All right. So immediately price was out of this range. The next thing I was beginning to look at is, don't forget we are within the Asia kill zone. Okay, so this setup developed inside of the Asia kill zone. Right. So um if you are looking for MSB, this is a low that would need to be broken. This low, if you are looking for MSB, all right. And if you are looking for MSS is basically break of structure, break of a strong um, structure. Okay, any break of structure, that's MSB, right? So um, price couldn't make a higher high anyway we have deviated back inside of the range. Before we deviated into the range, we had a flip, we had a supply, we had a demand to supply flip here. Okay, demand supply flip is basically a kind of reaction to demand or supply, and then one of them now failing after. Don't forget we have, what's it called, a supply zone here. I mean a demand zone here. Where's my, okay, so there is a demand zone here. Okay, so price reacted to the zone. Okay, but demand could not push price up to continue the trend, could not push price up. That means demand is weak and supply is strong. So, and then after the reaction, there was a reaction and then there was a break of structure. Okay, not only was there a reaction, there is also an inside bar candle. I haven't thought inside bar, but don't worry, don't just take it a little at a time. You won't know everything at once. Okay, so I'm just introducing the concept little by little. Okay, so you have an inside bar. This candle right here is what you call an inside bar candle. Okay, an inside bar is a range on lower time frame. Okay, so when you have a flip, okay, the flip only becomes valid um for you to make an entry if it takes liquidity. Okay, if it takes liquidity. Now, when you see an inside bar candle is basically a candle that the high of the candle is lower than the high of the candle before it, and the low of the candle is lower than the low of the candle before it. So if you check very well, okay, you would see that um the low of this candle is slightly higher than than the low of the candle that comes before it. So that's what you call an inside bar. So when an inside bar is formed and you have a candle that engulfs the inside bar, that makes it a valid zone, a flip zone that you can make your entry. With or without an inside bar, it is still a flip zone, but not every flip zone can be used as an entry point. Okay, that's what I'm saying. One of the ways you can validate a flip zone is when it takes liquidity. Okay, either in the form of an inside bar. Like I said, an inside bar is a range, and don't forget range is a form of liquidity. When a range is swept, that's liquidity. So you have the inside bar candle right here, okay, which is a range on low time frame. On the lower time frame, it is a range. Okay, that's what an inside bar candle is. And you see that this candle swept the high of these other two candles. Okay, it swept the high of the two candles and then broke structure afterwards. So that means it took liquidity and then broke structure. That's what validates a flip zone as a possible area of entry. Okay, if not, if it doesn't take liquidity, there is a high probability that price would trade back to this level. Okay. Okay, if price trades back to this level, I wouldn't want to even take this because it is no longer a range deviation. Okay, I would prefer that it takes out this low to form an MSS before I start looking for an entry. Okay, so but here what you are seeing is a range retest, is a range high retest. Okay, so price has broken below this low, forming an MSB. This is MSB, not MSS. Market structure break, not a market structure shift. Okay, so once you have the market structure break out inside of that range, so once you have a range deviation, you are waiting for the range to break any low. Okay, any low inside of that range. Okay, you are waiting for it to break any low that forms inside of that range. Okay, this is a low. All right, this low is also a strong low because it broke this high. You can see this high, it broke this high, so it is a strong low. Though if you look at the overall market structure, this is the low that needs to be broken for you to have a market structure shift. Okay, okay, but this low becomes valid for MSB, market structure break, because within the microstructure here, this high was taken. Okay, and what you are dealing with here is a range deviation. So price deviated back into the range, that is traded back into the range. The next thing you want to start with, you've seen the break of structure, you've seen a market structure break. The next thing you want to wait for is a retest of this range, a retest of this range. Okay, no, this is a range, this is a range high. So a retest of this range, that's where you want to make your entry, and then your stop loss would be at the high or this range. Okay, so your stop loss ideally will be here. You get, this is ideally where you want to place your stop loss, but because of this flip zone here, I was confident because of this flip zone here that swept liquidity and you have the inside, but I was confident that this level is likely going to hold. Okay, if assuming this level does not hold, maybe I got taken out, I will probably might re-enter or enter here and place my stop loss here because this is a range deviation. Right, but ideally, if this happens, I will be cautious. I probably might not even want to re-enter because ideally it has deviated into the range, broke structure, so you don't expect that it will continue to trade back outside of that range. This is what you call a range deviation. Okay, this is what you call a range deviation. So price retests the range high, and where am I looking for my entry? I'm trying to use this supply zone that formed after this flip. Okay, and you can see it held because it took liquidity. It took liquidity from this inside bar and it held. Okay, so remember I thought, okay, I'm going to drop the write-up on supply and demand zone today. I explained a bit of this in those write-ups, and I will say explain even more when I have or when I release a video on supply and demand zone. So um I could have used just this I could have used this, just the wick of the candle. That would have increased my RR. Okay, that would have increased my RR. So um that's how you trade a range. So I entered, and usually one of the ways you validate a range, like I said, is on the midline, on the zero point 0.5 level. You want to see reactions. You want to see price react to the midline. So you can see all these reactions, this reaction that happened, these reactions, rejections that happened on the midline. You can see when price came to the midline again, you can see that bounce from the midline. Price broke below again, that bounce again. Okay, so if assuming you were unable to enter um here, by the time price break back into the range, into the midline, you can enter again. Price forms a high and then breaks into the range high. You can enter at the midline and use this high as your entry point. Okay, you can enter. Yes, and your target would be the range low. Okay, the range low. I actually took a quick long here as well. Okay, I took a quick long because a lot of times when the range low forms, when the range low has been hit, you would oftentimes see that price would retest the midline of the range before it goes back. It continues in the direction, in the overall direction. So immediately I saw liquidity sweep, okay, market structure break, and then you see the fair value gap that was left behind. And then I entered here. Okay, I entered here and I could have used this anyway. I could have used this candle and I would not have been picked. But because of this fair value gap, okay, this candle has a higher probability of it holding compared to like this candle too will hold, But what I'm saying is because of this fair value gap, it might end up not getting here. So that was why I used this candle. On a norm, sometimes I might have even used this candle, but I used this candle this time around and I got picked. Um, and I targeted this high. I just placed my order and I slept. I just woke up and I saw that um, the trade had been closed in profit. So, and then price rejected from the midline. Like I said, you want to see rejection from the midlines, the rejection from the midline. And then what happened? Price continued down. After price continued down, usually what you would see is that price would come back into the range. I mean, price would come and retest the range low. Okay, so the way I like to trade this is if price trades back into the range, okay, and then trade back outside of it, okay. What I like to do is this is what you can do. Either you place your entry at the range low and you use and the next high that forms as your stop loss, or you wait for price to deviate back inside of the range, okay, and deviate back outside of it. Okay, trade inside it, trade back outside, and then you enter when price retests the the supply that forms. Okay, so you enter somewhere here and use it as your stop loss if you are looking to minimize your stop loss percentage. Okay, or you just simply place your entry here and you use here as your stop loss, and then when you take profit, preferably at the low, okay, or the supply zone. Okay, you can see the liquidity that was built on the way up. So you could enter a trade here again, but I'm not interested in a trade here because um, we are outside of the kill zone, and I don't like to take trades outside of the kill zone. But the fact that it's outside of the kill zone does not necessarily means that um, it is not going to hold. So you can see price took liquidity. This is an equal high. Will it get swept? I doubt. I don't. Well, it's good. It's good. It's good. But I'm not going to be interested in this because this setup is for me outside of the kill zone, and I personally don't like. If I was on the charts, I probably would have taken a long to this to retest this range low. Okay, you can see from here this demand chain. Okay, this reaction, this is a flip zone reaction. Would I have entered? I don't think I would have entered. Okay, maybe I would have entered because we have inducements here. Okay, maybe I would have entered. Yeah, I would have entered. We have a flip zone and then we had inducement before the zone. Okay, so maybe I would have entered. I would have entered somewhere here. I've entered right there, then I'm going to target the range low. Okay, that's 8R. Okay, so um I wasn't on the chart because it's forming inside of the Q zone. Okay, you can see the consolidation that happened also. So this is not so much consolidation, manipulation, and expansion because this is not an expansion. All right, so that's it. I hope you understand. Let me show you more examples of range, how you can trade a range. Okay, usually, like I said, range is formed when price has made an aggressive move to the upside. All right, um, so mm, I think this is a range. Let me see. Oh, so this is a range. This is a range. So here you see that price made a high. You can see that price made a high, made a low, and then started trading in between. Okay, and um, you have a low. Okay, so this is where you extend where is it? Let me draw this. Okay, ideally, normally you want to use this. Okay, forms a high, forms a low, and then started trading in between, and they are waiting for a sweep of the low. Okay, now when price dropped like this is not longer a deviation. Okay, this is no longer a deviation. This becomes, you extend the range. Okay, you extend the range and you try to see if the zero point 0.5 level, if there were reactions. So you can see that there were reactions at the zero point 0.5 level. Okay, see reaction here, reaction there, and you just wait for the range high for continuation. Okay, the range high will be swept and the range low will be swept for continuation. For reversal, the range low will be swept, the range high will be swept, and price continues downward. Okay, so this is still ranging. Okay, this is still ranging. Okay, this was your initial range, range high, range low. They are waiting for a sweep. But when price traded like this, and then you see this, you extend your range. This becomes a range high, this becomes a range low. Okay, so you wait for a sweep of, for continuation, you wait for a sweep of this high and then a sweep of this low. For reversal, you wait for a sweep of this low and you wait for a sweep of this high. Okay, so price, this is what you call the deviation. All right, so you see consolidation just below the range low and then broke below and broke back inside, and then you enter and you retest. When it broke back inside, it did break structure. Yes, you can see that it broke structure. Then you enter at the low. Okay, you enter at the retest of the range. Okay, personally, I would have used this. Maybe this would have been picked. Well, I'm not quite sure. But personally, I think because I like to have my stop loss percentage small, I might have used this because of this fair value gap. I might have used this here and I might not have been picked. So, but ideally, this is your supply zone. Even if you had used it, you would not have been picked. But usually, you want to enter at the retest of that low after it had broken structure. Once it retests that range low after it breaks market structure, okay, either an MSS or an MSB. In this case now, this is both an MSB and an MSS. Okay, this is the MSB, market structure break. This is market structure shift. Okay, so where do you target? Okay, take profit. Maybe you can use the range, midline of the range, the equilibrium of the range, and then you take your profit at the high of the range. Okay, so for reversal, what you are waiting for is you want the range high to be swept. Okay, so you see the range high was swept, and then price came back again. You can see it retest the range low again. So I would have even been picked if I had used um my entry. So you can see that this deviation was not even broken. This deviation was not broken, and price continued. Okay, so that's how you trade a rate. Let me show you some examples on BTC. Okay, this is BTC's current trading within a range, forms a low, forms a high. Here I'm looking for continuation. Okay, so price, as this is deviation. Okay, deviation, you can see that this is higher high, lower low, higher high. Okay, so this is the high, this is the low that needs to be broken for MSS, but you don't need MSS. What you need is what is market structure break. And you can see broke this low, broke this low, broke this low. If price should come back to retest this, first take profit at this low at the midline, and the next take profit at the range low. Okay. Or maybe you take 90% and you let the rest continue. So BTC is actually still going down, most likely to maybe 24, 23K. Okay, so this is how you trade a range. Let me show you another example on BTC 4-hour time frame. Okay, this is a range. Okay, okay, price is dropping aggressively and then forms a high, forms a low, forms a high. Okay, you wait for deviation of that high for continuation. Okay, so you can see this was the deviation. Price deviated and traded back inside of the range and then retest of the range. Retest, use this place as your stop loss or just identify any supply zone. Okay, sometimes price will just retest the range low and then drop. Okay, but um, if you are trying to minimize your entry, you can use the supply zone that forms, okay, above the range, okay, and your stop loss will be here, okay, stop loss will be here. And where do you target first take profit? You can see how price bounced from the midline of the range. So that will be your first take profit, and your next take profit would be this low, maybe 90%, and you let the rest run. Okay, if for example you couldn't catch the drop, okay, maybe you took full profit at the midline and you want to re-enter at the range low. Once price trades back above the range high, okay, trades back and then trades back below, okay, and retest, you enter here, this place as your stop loss. Or you just look for any supply zone that forms above the range high, then you enter here, this place as your stop loss, and your take profit will be the range low, or maybe 90% off because it is continuation, 90% off, and you let the rest run. Okay, I didn't play this well because I was trying to play intraday. I wasn't interested in a swing long. So I didn't play this well. It would have been a really, 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 really nice trade. This is another range here. Okay, price is dropping. Price forms a low. Let me hide this. Oops. And to delete it. Um, Let me show this only on the daily. Okay, so if I should draw my range, okay, so you see price forms a low, forms a high. Okay, price deviates below the low. Okay, once price goes back and retests, okay, and retests the low, okay, that's where you want to enter. Okay, if you go to the lower time frame, you would actually see this retest. This is not very vivid on the 4-hour time frame. If you go to the lower time frame, you see how price went up and then came back to retest the low. And where do you target? Where do you target? You target the midline first and then the range high. Okay, and if you want to look for a short, price has deviated and come back into the range. Okay, you wait for a retest of this range high. Fortunately, here we didn't get a retest. Okay, if you didn't get a retest, you can enter after price deviates back into the lower part of the range, and then you have a retest of the midline here as your stop loss, a retest of the midline, or you wait for when price breaks out of that range completely and then retest the range here as your stop loss, or you just look for the supply zone that forms here and you wait for the retest and then you drive it out. Okay, so that's how you trade a range. Okay, that's how you trade a range. I hope this is clear enough. I hope you understand. Just wait for range low, range high, sweep the low, target the range high. Okay, or if price is going up, range high, range low, sweep the high, target the low. Okay, that's pretty much. I'm still going to release a write up on and a video specifically on how to trade the range, but I hope this is explanatory enough.